everybody, welcome back to another episode of Metals and Momentum. For the record, I'm recording this on April 9th, and my newsletter comes out on the 11th, which will be this Saturday. If you're interested in receiving the newsletter and getting some of the updates that I throw in there, join me on Substack. I'm Metals and Momentum. You can see my Substack on the screen right here. And we've just had an absolute stellar week. Like, if you just scroll back on my page here, you could see me posting about oil. Despite the pop on oil today, I remain bearish until we close higher above the 120 on WTI. That was what the chart was looking like. And then I was going short on oil right when we saw this little doji here. I'll jump over to the chart in a second. I released this video a couple hours before oil started breaking down, and then this is the breakdown the following day. Absolutely unbelievable gain. Not only did we short oil, we also went long silver and just made an absolute killing. Really what I was looking at in the oil chart is this channel that we're trading in. We've been following this for quite some time. In fact, I was even short, I think it was right around here. We started to get short. We waited the day here, and then we saw that big collapse. And once again, nailing another huge collapse on oil. I saw this doji candle right here. Let me just make a few highlights. Well, first of all, let's talk about this topping tail. That is this candle right here. This topping tail here was in play for quite some time. And as we started to creep upward and come to the top of this channel that we've been following, and also tap this area of resistance, I said, oh my goodness, we got to get bearish. And then the doji candle came in, and I immediately jumped in. Normally I would like to wait for that confirmation, which was this candle right here. Normally I would like to wait for that confirmation, but the markets have just been so volatile that I've kind of been ignoring some of the confirmations a little bit, because what could have happened is, like, oil could have just tanked like right then and there that following day. And I wanted to make sure that I was actually in the trade. If I didn't nail like the most perfect timing, then that's okay with me. But what did we see the next day? Well, we got that confirmation of the doji candle. What this doji candle is essentially just this like little cross that you see right on the screen. And also we needed a close below this top of this doji candle right here, and that's exactly what we got. And then you could see the big crash on the announcement with like Donald Trump and everything like that. Everybody's talking about oil. It's just been absolutely nuts. But not only did we go short oil with my paid subscribers on Substack, we also I said I was going long silver, and we saw I think it was a 6% move on silver in a single day. I was watching essentially Donald Trump make that announcement on oil. So I was seeing oil crash, and I immediately knew we were going to be up quite a significant amount, because I was actually buying 2x silver positions right before the announcement with Donald Trump and everything like that. So I knew silver was going to be up big on the open. Immediately sold that on the open, made quite a nice gain. I actually am writing my newsletter right now, so I'll show you the trade and investment recap. On March 31st, I began buying 2x silver stocks. On April 1st, not an April Fool's joke, by the way, I was actually buying uranium. You can see the trade notifications are all linked here. On April 2nd, I was buying more 2x silver stocks, because essentially what I was seeing, let's just make sure I get the dates here. So what did I say? This was March 31st and April 2nd. So what was the 31st was right, oops, I'm looking at the wrong day here. So the 31st, I think I bought right near the bottom here on that big breakout. And then we retraced all the way down here. So this, oh yeah. April 2nd. Yeah, right when we got close to $71, I said, this is probably going to be a fake out. And we ended up closing above $71 right here. So this was like immediately up on the day, but I just held both positions. And then, of course, we came into that fall in oil. And I was like, well, I mean, if oil's going to crack down lower and it's probably going to go like 10%, I was looking at the chart and I was saying to myself, like, I think we could probably fall somewhere around like 10% rate from here down to 102. That's what I was thinking, but there was definitely potential to go to this base of this channel. And I thought it was going to happen like maybe over a few days or something like that. But that's not what happened at all. From the peak right here, about where I bought into my short position, that was a 15% drop in the price of oil. Once oil opened up, it was right around here, and I immediately sold out of that oil short. So what was crazy when I was looking back on the chart of oil is not only was I short around this decline. There's been two major declines in the price of oil since the Iran war started, and I was actually short for both of them. So that was pretty unbelievable. And really, all I was paying attention to was the channel that we were trading in, and then I was looking at the trading patterns, kind of going into the weekend, speculating a little bit here on there would probably be an announcement from Donald Trump. There was, and then there's the decline there. But I was really watching that channel happen right here, and I was seeing that 102 resistance being tapped right around here. So that's what I was paying attention to. Up here, like I said, that doji candle, that was the key with this one, and also understanding what the topping tail actually means is you should really remain bearish when you see these long topping tails until we break above this top area right here. And when we started to get closer, I started to go, no, not only are we close to 119 as in the ceiling that we had put in with the topping tail, but we were also banging on the edge of this upward channel. And I said, I don't think this is going to pop upward whatsoever. And then we get that announcement, and there it was. What a beautiful trade. There was something going on with the inverse ETF that I was using. It was supposed to be a negative 2x inverse ETF, but my gain on the oil trade was 7.16%. So a little bit disappointing on that, but that's why I don't really love trading inverse ETFs. They're not always accurate, but what's really frustrating is like when oil was going up, it was 2x down. Well, but when oil was going down, it was like 1x, less than 1x of a return there. So that was kind of frustrating, but we still made an absolute killing on the oil short. And not only did I call it right with the oil, I also just absolutely crushed it on silver, buying the 2x silver stocks. That actually did go up 2%. It was silver popped 6%. So in one single week, the silver 2x stock jumped 11.6% for me. And these were all trade notifications that I sent out to paid subscribers. But that wasn't it. This past 2-week period it's really been the past 4 weeks have just been double-digit gains in the portfolio. It was just an insane period of time. So much opportunities. I felt like I was sending trade notifications out almost every single day. I was working like a freaking dog trying to make sure these trades are rock solid and send these out to my paid subscribers on Substack. And my goodness, did it pay off. We also were trading in EWZ. I don't have the chart pulled up right here. I'm not going to bother showing you, but basically we were looking at a bull flag there, and that gain was 9.2%. Pretty incredible in terms of the performance here. And going into the next 2 weeks, I am getting a little bit nervous. I'm going to be really honest with you. I have the S&P 500 chart pulled up on the screen. I'll show you that in a little bit. I'm also pretty heavy into uranium, and I'm a little bit uncomfortable, to be honest. I might reduce some of my exposure to uranium, and I think I'm going to do that over the next day or two. We'll see what happens on Friday, but I'll show you the chart here in a moment. So that was oil. We went over the silver chart briefly. Let's take actually, before we move on, let's take a little bit of a longer term outlook on silver. I think we're kind of close to the bottom, but I think we still have some more downside potential here. One of the things that obviously is just so obvious is this bear flag forming right here. We should see some sort of chop. Whether or not we touch $81 or not, I'm not 100% sure. It's going to pretty much be dependent on what happens with the S&P 500. Do we rally another day? What happens with like the announcement, the next announcement with like Iran and Donald Trump? Who knows what's going to happen there? It's getting a little bit tough to make some calls here. We're kind of in like a wait and see kind of moment. So if the S&P 500 flushes, then I think we're still on track to see silver actually turn around and decline and reach the $54 kind of range. I still see that in the cards with that bear flag. I mean, what would really have to happen to change my mind is we really break above like 81 and then start to make a run for $100 US. Of course, that's what we're talking about in here. So I don't foresee that happening in the near future whatsoever, especially if the S&P 500 is going to decline. I still think there's some decent downside potential in silver, and we'll look to maybe accumulate a little bit closer to $54. Let's look at gold. Essentially, gold is looking like very much the same kind of chart pattern. You have that big drawdown, sideways chop upward. There's your topping tail, like we were talking about on like oil. Same topping tail played out on silver, and we got it in gold as well. What we would really need to see happen is a break above this key area here. That's a long ways off. I don't foresee us getting there in the very near term. Like I'm talking like in a like 2-3 weeks or anything like that. What we have here is the exact same chart as the silver chart. Bear flag right here. I still see some downside potential, probably retracing back down to the 200-day moving average. This is going to be rising, so by the time we get there, it could be somewhere around 43.59, and then I would expect a bounce off of that 200-day moving average. We'll have to reassess when we get a little bit closer there. So that's gold. Let me see what else is on my list here. So just to make sure I don't miss anything, because this is a big one here. This is the S&P 500, and what I've been doing is really trying to make go deeper into the analysis on the S&P 500. We've been really watching these key support levels back since 2025. Really, the end of 2025 was when we started to get that rounded top on the S&P 500, and I started to draw out these key levels. So we have a key support right here, a key support right at 6,550, and then we are essentially bouncing into this area of resistance. And one of the reasons why I have this labeled as area of resistance is we have all sorts of reversal candles shown back in 2025, early 2026. There's all these reversal candles like this right here. This was a reversal candle. This right here, what is that? We just talked about it on gold and silver. That's a topping tail right there. Didn't break above that topping tail. And look at that reversal on the S&P 500. Now we did rally back after a little bit of a drop there, but again, we have another reversal candle after a little bit of a decline. This time we're going in the opposite direction, small little pop upward, and we've just been forming all these reversal candles, and they all coincide. I'm going to make this line a little bit more easier to see, pretty much right here. So this is an area of caution. I have it highlighted in red here because we are definitely into some key resistance points right here. And really, next week, we're going to determine, are we going to break back up to new all-time highs? I don't think that's probably going to happen, but I'll be non-bias in this, and I'll say like, okay, if we break above this key area of resistance, then we could make a run there. But until it does that, I'm going to remain pretty bearish on the chart here. I think we could get some sideways chop in the S&P 500 for a little bit of time, probably until that announcement comes with what's going to happen with Iran. So really what could likely happen is something like a retest to the 200-day moving average, and then maybe we're going to tap along this horizontal resistance point and just trade sideways for a little bit of time here until we get that announcement with Donald Trump. And then maybe I'm thinking we're probably going to go lower. I currently have a price target on the S&P 500 of 61.28. I don't know how we get there. Like, for example, we could just like reverse and just go straight there, or we could go sideways chop. Either way, we have this downward sloping trend line. This correlates with actually the high of the S&P 500. Back when it was at 7,000, I was saying, we need to watch 7,000. That is a key point of resistance. Markets love big round hole numbers. If you look back on like the tech bubble, the S&P 500 rounded out at one of these key support levels, a big round number. And I was watching the chart on the S&P 500 and saying, 7,000, I don't think it's going to break. And then we started to get pretty defensive as this started to roll over. We have a lower high, a lower high, a lower high. And now we are, let me clean this chart up a bit. Now we are running into another lower high right here. And it's probably going to be met with some resistance and roll back over somewhere like this. Like I said, I don't know how this is going to get to my price target, but ultimately I still see that in the cards because we are now for sure making 1, 2, 3, and there's 4 lower highs along this resistance point right here. And I say that holds until it doesn't, right? Like, so we just need to be non-biased, put our biases like aside, and don't pay attention to the news. Don't pay attention to the headlines, because if you paid attention to the headlines, then they would have told you oil is going to 150, and then you would have missed this massive 15% correction on oil. And if people start to say, oh my gosh, like we've rallied, like what are we up, like 7% or something like that? Let me just measure from the top to where we're at right here. Let's call it 7.5% there. That's a significant rally on the S&P 500. And if we start to kind of stick around this level here, people are going to say, oh, we're going back to all-time highs. And until we break through this resistance point, that's just not the case. And I will still maintain my price target of 61.28 on the S&P 500 until we actually break above that resistance point. And right now we are not we're not really close. Like we're not even like touching this area. We're not slightly breaking above. We're going to see what happens next week. And this is the most important chart, because whatever happens in the S&P 500 is going to happen to all assets across the board. And right now, if my price target is 61.28 on the S&P 500, then I'm going to have to remain bearish on silver, on gold, on oil, Bitcoin. They're all acting the same. Uranium. Let's talk about a uranium stock right now. I've opened this trade up to the free subscribers, so I can openly talk about this on my YouTube channel here, where we've been discussing this on the behind the paywall for a little bit of time here. But as we started to get lower and lower, I said, you know what, this looks like a pretty decent opportunity, and this is probably going to bounce off of that 200-day moving average. Now, the problem that I see with this is we're running into this resistance point right here. I'm actually going to even turn this red because this is a key level to watch. Now we are in an uptrend and we're also breaking out of a wedge. So you can see the wedge pattern right here on the chart. We got that breakout. There's the confirmed breakout. Realistically, if the S&P 500 can just like chill, right, then this should trade a little bit higher. But I'm going to be watching this very, very closely. I've got a key channel laid out right here. I'm going to be watching this and making sure that we don't break below this channel. And if we break below, then I'm going to reduce my exposure pretty much down to probably zero, because that means the S&P 500 is probably breaking down, and these uranium stocks have been so volatile. It's just been absolutely nuts. Like, look at how big these candles have been. Like, we've been up 4%, down 5%, up 4%, and then down 5%. Like multiple days in a row. Like, here is a 5% gain, and look at, we've had these massive candles just up, down, up, down. Like, here's another, there's the breakout. We've confirmed we're just below, just over top of this confirmation of the breakout. It's just been absolutely insane. The ride has been crazy. And right now, if I'm looking at the S&P 500 and thinking like, man, I don't know how this plays out. Like, I think there's potential that we just crack down lower and it's just like a straight shot down to 61.28, but there's also potential for this to trade sideways. And if we do trade sideways, then I think uranium will do okay. But I would have expected a bigger move out of uranium. Now, I said there was like a 7% gain on the S&P 500. Uranium's not bad. Like, this is like still like from... I guess I missed this candle here. So over from where we are right now, 7% gain. Like, I would have expected uranium to pop like 15, like 20% on like the gain alongside the S&P 500, but that's not what's happening. So a little bit nervous on uranium right now. I'm thinking I'm probably going to reduce exposure on uranium, all of the uranium positions that I have right now. So that's something key to note. And if you're following me along on this trade, then I think it would be prudent to reduce exposure, because really we're having a hard time breaking above that 2052, and until we break above that 2052, we have to like minimize the excitement here. There is massive upside to like where the top is on uranium here. Like, from here up to just this recent high, this is a 25% gain, but oh my gosh, it's just going to be very, very hard to get there if the S&P 500 is cracking down lower. It's probably like the chances of that happening is like 15% maybe, very low percentage in terms of just like returning back to the high. But if we break above that 2052, then we're in good shape here. So watching this one closely. Like I said, I'm looking at my overall portfolio and thinking to myself, okay, how much cash do I have right now? Because we've seen a massive rise in the S&P 500, 7% in the past couple of weeks or so, the past week. And I'm looking at my overall portfolio and I'm going, do I have enough cash? And I think that's a very prudent question to be asking yourself at this moment in time. Do you have enough cash? And if the answer is no, then I think it's smart to reduce some of that exposure, because if we start to crack lower on the S&P 500, then it's just not going to be a fun time. You don't want to be trading into a down market. It's tough. So that's my advice. If anybody's wondering what I'm doing with my own money, it's exactly that. And that's what we talk about on Metals and Momentum over on Substack. I have a bunch of links in the description down below. I'll leave them there. You can join me on the free tier. It's $9 a month if you want to join the paid tier, and that gives you access to trade notifications. And we have just absolutely crushed it over the past like 4 weeks. It's unbelievable, really, what we are seeing. It's crazy to be up like 15% on your portfolio while the S&P 500 is essentially like flat or like down over the last like 6 months or something like that. So yeah, really stellar performance, and the trade notifications are definitely paying for the subscription for my paid subscribers. So if you're interested, join me down below, and that's where I'm going to leave it. Let me know if you like this video by hitting the like button, and subscribe to the YouTube channel for more updates like this. Thanks so much for watching, and we'll see you in the next one.